So basically what you're saying is that we go to the Morningstar website, we check the year, 1 year return, 3 year return, 5 year return, and we see, oh, this fund has done really well for the last 5 years, so it must be a great fund. That's not a good approach.
Not a good approach at all. So what the data showed us was two very stark things, right? The first thing was that half the flows, if I just look at 2024, in fact, not even 24, we went back 5 years. And what we looked at was, over a 5-year period, if I just look at the monthly flows that came in, 50% of the flows came into quartile 1 funds ranked on a 1-year return. So if I was making a fund choice, I'll look at the past 1-year return. And this is within the diversified equity categories, right? We're not even getting into sectoral and thematics. And 50% of the money came into quartile 1 funds. Another 32% came into funds that didn't even have a 1-year track record. So, newer fund launches and things like that. So think of it this way, more than 80% of your flows are coming into funds that probably have done well recently or have just been launched recently. But the staggering extension to that is when you ran this data as of 2019 to 24. So if I was sitting in 2019 and I picked these quartile 1 funds, how many of those funds sitting in 24 were still quartile 1, right? So out of 10 funds, less than 3 funds still remained in quartile 1, right? On a 5-year time period. So the point that I'm making is that, well, performance can give you a sense of how a fund has done in the past, but it's not necessarily a surety that it's going to continue to do going well ahead, because there are various factors that you need to consider. So performance is good, perhaps way of shortlisting, risk-adjusted parameters, but don't stop your analysis or base your decision purely based on that. I think that's what the study is resoundingly telling you, that don't just pick the most recent short-term winner.
What are the other things apart from past performance that we must consider before buying a fund?
Sure. So when we look at analyzing funds, right, there are 3 things we look at, and we call it the 3 Ps. So one is the people, the process, and the parent, right? So I'll get into each of these, some pointers that we can look at. So the people is obviously you want to look at who the fund manager is, the track record that they've kind of developed over a period of time. Perhaps if they're a new manager to that asset manager, what's been the track record managing similar strategies in the past. You would want to look at the support cost of them, because while the manager is doing what they're doing in terms of they're the face of the strategy, there's a dedicated pool of analysts who are delivering that raw material in terms of ideas for them to consistently kind of generate that alpha for them. Right? You want to see some things like bandwidth, because if a portfolio manager is managing too many strategies of differing types, can they? A person has only X number of hours that he or she can dedicate, right? So how are they kind of channelizing their time? Do they dedicate enough time for that? Then the second part, which is very important, is the investment process, right? What is the investment process of the strategy, and has it been consistently applied over a period of time? You don't want managers who are extremely fluid in terms of chasing market trends, because you could get it wrong both ways, right? So you want a process that has an edge, right, and is repeatable over market cycles. And there'll be periods where that process could underperform because maybe you have style headwinds. For instance, if you're a growth manager sitting today, you will underperform in a more value momentum-driven market. But you stick to your style. That's good, because as growth, as and when it comes back, no one knows when, it will
your style will work again.
Yeah. And there are a few things you can look at it, right? So you can look at the historical, what you call the style holdings or the size holdings of the manager in terms of how they allocate across market capitalizations between value, growth, and blend stocks. Are they adding too much cash in the portfolio, which could be a challenge with too much money coming in and they don't find enough ideas to deploy? Number of stock holdings, how concentrated or diversified their portfolio. Is that changing over time, right? So you as an investor, you can look at all these data points and actually make a sense of, is it steady state or have things materially changed with the process?
Thank you for watching CNBC TV 18, and do follow us on all our social media platforms for news, updates, and more.